Hello, this is Jordan, and this video is being recorded on Friday, September 3rd, 2021. Thank you so much for joining me today. Please like, comment, and subscribe if you're watching this on YouTube. And in this video today, I'm going to discuss an updated outlook for silver. I have, over the past year, done two videos analyzing the potential for silver, where it's at technically over the near term and very long term, and so I'm going to update that in this video. I'm also in the description going to link the two past videos so you can see how I did, if my analysis made sense, if I turned out to be completely wrong or mostly right. I guess that's up to you to interpret. But enough of that. Let's get into the video. And so this chart shows the most bullish moves in silver. I guess you could call it bull markets in silver, but to me it's more strongest moves, because that silver really makes exaggerated moves. It rarely has a sustained, solid type of uptrend over years and years. You could say it did that in the 2000s, but it had that big crash in 2008. But anyway, the here and now. Silver here and now is in black. And you can see when we shot up in 4 months to close to $30, at that point it was clear that silver needed a rest and was going to rest for at least a year or more. And here we are, we're 13 months into that, and you can see that. I mean, what has happened is good. I'm going to expound upon that in this video. Made a strong move up, it's digested, consolidated that move, and it's come back to the pack. So that's a good thing. I mean, if silver would have broken out and run to 50, it would have been over. I mean, it would have made a peak and it would have been done for, at best, it would have been done for 3 or 4 years, in my opinion. I mean, that's just, you have to understand how markets move. And we can see that historically, if silver had broken out and run to 50 too soon, it would have made an important peak and it would have been done for years. So it's a good thing that it's come back to the pack. And it's really all I can say about this chart. I mean, looking at history, that makes an argument that if we say the cyclical bull market in silver started 18 months ago or whatever it was, history tells us it could get to $50 or $60 in this move. That's just history. I mean, that's just the average or the median. Could go a lot higher. We'll see. But anyway, long story short, it's come back to the pack. It needed to do that. That's a good sign. Setting up for a more sustainable move. And, here we have this is a weekly chart going back 50 years. And there's several things I want to talk about in this chart. Okay, first we have what I overlay here, not overlay, what I put in the chart. You can see the two blue arrows. That's the 165-week moving average. Now, that's the equivalent of the 40-month moving average. I love using the 20-month and 40-month moving averages in my work. And what's very interesting is two of silver's biggest moves, the late 70s and the 2010-2011 period, those were preceded by silver testing the 40-month moving average. Now, I'm not saying it has to do that again, but if silver were to continue to consolidate for months and months here, you get into next year, the middle of next year, that 40-month moving average, that's going to be creeping up towards 22, 23. So that's something to keep in mind. I can't predict the future, but it's possible silver could stay in this range for another year. Maybe a year from now, it tests 22, 23, and it tests the 40-month moving average like it did in 2010 in the mid-1970s and before it exploded. So keep that in mind. Now, in addition to that, you can't really see it on this chart, but silver has put in a solid bottom as far as, let's just say over the medium term. Time will tell. But I think it's fair to say over the next 3, 4, 5, 6 months, this bottom in silver is going to hold. I could have a better chart to show you, but I didn't want this to be too long. Silver held above the 400-day moving average and the lower 200-day Bollinger Band. This is something I was talking about months ago in my premium service, that those were important support levels. And if you look in the 2000s, you can't see, but silver held those levels a couple times. So silver held pretty important long-term support. So we're probably going to get a rally here. I think it's going to stay in this range. But the bigger picture is silver could be building out a bull flag pattern like it did in the mid-70s. And look there at the bottom right of the chart in my annotation. Now, bullish flag patterns, typically you get a really strong near vertical move in a market, and if the market is holding and digesting the majority of those gains, it could be setting up a bull flag pattern. And so what I show there in that annotation at the bottom right, you can see in that annotation, in that example, that those lines, they're holding above the 38% retracement. So when a market does that in that type of scenario, it's setting up a potential bull flag pattern because it's holding the majority of the gains. You really need to hold 38% of the gains to be in a bullish flag pattern. And guess what? We go back to the blue arrows again. Well, actually, only one blue arrow. If we go back to the mid-1970s, that huge move in silver that took 3 or 4 years to consolidate, it held the 38% retracement. Well, I think it might have dipped below it briefly, but in the very big picture, that consolidation, it's not a perfect flag. But the market there in the mid to late 70s, it was holding the majority of the gains. It was holding the 38% retracement. Guess what? Today, that's what's happened again. Silver, it had this huge move from 11 up to 30. It's holding the 38% retracement, which I think is $22. So the longer, silver, it already held that. It already held that once at the very beginning of the correction, and in the last month or so, it held it again. So that's a very, very good sign that silver looks to be, potentially building a bull flag pattern. And the measured upside target of the bull flag pattern would be about 48 or 49. So if we see silver continue to rally here, and then maybe it comes down early next year, test 22, 23 again successfully, just one more test of that 22, 23 level, that would really confirm that this is a bull flag pattern and that silver is setting up eventually to run to 50, because if silver breaks that 28 area, which is very stiff resistance, you need a monthly, quarterly close there. If silver breaks above that, the measured upside target is around 50. So that's the very bullish side of my analysis here. If there's another 6 to 12 months of building the bull flag, nobody will like that. However, that consolidation, that strengthens the bull flag pattern. And eventually when silver breaks out, that's how it runs to 50. So that's what I'm seeing here. That's the significance of silver holding 22, 23 and the 38% retracement. Oh, and last thing at the bottom there, I have the net spec position in silver. That's the net spec position divided by open interest. And, that's in pretty good shape. It's actually, relatively speaking, it looks better than what we see in gold. And so that has come down a good amount. And if silver were to consolidate for another 6 or 9 months within that range of 22 to 28, the net spec position might come down a little bit more. That's how you facilitate big moves. You correct through time. Market has a huge move, and then it makes a bull flag pattern. Over that time, sentiment changes, and the market not having broken out, all the people who are expecting $50 immediately, they might sell. There's other people hoping for a breakout. It doesn't break out, they sell. So eventually, after months and months and months, sentiment can get more bearish even without the market correcting in terms of price. That's what it can do as far as correcting through time. Now, last chart here, these are just big picture comments. One thing I want to mention at the bottom, that's just a rolling 4-year return. This is a monthly chart. So I did 48 months. So interestingly, the rolling 4-year return, you can see quite a few times the rolling 4-year turn, look at the blue arrows, has hit about 230%. So if we take the recent low as far as monthly data and we multiply it by 230%, that gives us about a potential target of $46 by March 2024. Well, let's just round up to 50. That's a strong target. So that's potentially $50 in 2.5 years, 2.5 years. So that's just one piece of analysis there. So that, I mean, over the next couple years, that's really should be the focus, is silver breaking through 28 and getting to $50. I mean, the $100 targets, let's not worry about that until silver looks like it's going to break 50. Interestingly, this is a monthly line chart. So $35, a monthly close above 35. And also the quarterly, I think the quarterly resistance is around 36. So that, I mean, we see a monthly quarterly close of up 35, 36. That's going to tell you that silver is going to go to 50 and be pretty hot. So those are levels to keep in mind. Big picture, silver is looking better. It looks to be in this bull flag pattern. I think I could be wrong. I think the bull flag pattern is going to continue. And the positive of that is the longer that happens, that's going to give silver much more energy to be able to take out the resistance at 28, 29, 30. And then after it does that, you have a measured upside target of $50. So that's where we are. Hope you enjoyed this video. Leave me a comment. Let me know what you think. Check out all my work at TheDailyGold.com. Thank you very much. Hope you have a great weekend, and I look forward to seeing you again in another video.